Hi everybody. Most of the questions people ask us if they wanted to buy a house, if they are first time buyer. They said we're looking for a house, we have say 25,000 or 30,000 or 50,000 pound income per year, how much mortgage they can get and what kind of house they look for. Being an accountant, I can tell you based on your income how much house you should look for. Of course, everybody have big dreams, everybody want a bigger house, a bigger car, but it's all run with your income. That's why we always tell people, please try something new, be in the business, and you can have a decent income. But I'll come back to the mortgage questions again. If you wanted to buy a house, say for example for £100,000, your income need to be between 22 to 25,000 pounds. So what happens is when you go to the bank, when you go to the mortgage advisor or the lender, they multiply your income by 4 or by 5. So if your income is 25,000 pound, some lender will multiply by 4. So say 100,000 pound, you can get a loan. So 100,000 pound mortgage they can give you, and then rest you have to put a deposit. Being a first time buyer, there's so many options you have. If you look for a brand new house, there is a government buy scheme where you pay 5% deposit, and the housing society or the housing company, they will put rest of the money, or the government will put like 20%, and then you will buy the house. But again, that is a debt you will pay at the end of the day. And other option is any kind of house you look for, and you have to pay 10% deposit for the house. So if you have £100,000 house you're looking for, you have to pay 10%, which is £10,000. If you wanted a £200,000 house, of course your income need to be there. So whatever the options you have, it's all run with your income. Make sure your credit history is good. There is nothing, any grey mark on your credit history, otherwise this will also affect to get a mortgage. Even though you have a good income, you have a regular income, you have a permanent job, if your credit history is not good, you will not get the mortgage. So make sure you have a clean credit history so you can get best rates, best interest rate on the mortgage. Being a first time buyer, it is easy to get the mortgage, but you just have to tick few boxes. If you are employed, you need 3 pay slips. So if you have 3 pay slips from your employer, give to your bank or the mortgage lender, they will do the assessment and they can tell you, look, this is how much we can offer you. If you are a self-employed, they need last 2 years tax return and the tax calculations. They normally call it SA 302. If you have an accountant, they can give you all these documents. So last 2 years income, if your year 1 income is say £50,000 and your year 2 income is £40,000, they will add both income and divide it by 2 and then get the average. So don't think last year your income was say 40,000 and this year income is £60,000, they will look for 60. No, they will add them together and they will get the average. So before you go, just ask these questions before you go for a house, so you know what is your limit, how much value of the house you should look for. So these are very, very important things you need to know about it. If you have any particular questions, I will put a link at the bottom of this video, all the contact details on our website. You can drop us a message or you can get in touch with over the phone. We'll definitely talk to you and tell you if you have any specific question. Again, stay safe, stay healthy.